Hey, Bulls and Bears, how are we doing? It is Saturday, December 3rd, 2022. Thank you for being here. Got some news I want to get caught up on today. Layoff season is in full swing. Layoff season is in full swing. Another word for layoffs is fired, getting fired. We're going to talk about a story here. Thousands of people getting fired through text messages and emails. And we're going to get caught up on some broader economic information here. First, before we get started, I was actually in Costco today. Didn't see any slowdown in shopping at Costco, but Costco is always really crowded, at least where I'm at. So there's really not a good gauge as far as holiday shopping by going to Costco because so many people just go there for just things. I wasn't shopping for the holidays today, and I went to Costco, and I was thinking, is it really worth the membership price? And I went through a few things and kind of priced them compared to where I could buy them elsewhere, and I found out that it is definitely worth it. I mean, the syrup that I buy this maple syrup, this natural syrup. It's like $12 and something there. I can't find it for under $18 anywhere else. And that's just one example. There's many things that you can go there. Rotisserie chicken was like less than $5. My local Albertsons has it for like I think $8 or $9 for a chicken. So some things are really crazy cheap there. So yeah, again, not a good gauge of holiday spending by going to Costco because it's always crowded. But I was there today. But let's get into this story. Layoffs and firings. This is out of the Post. United Furniture owner disappeared after firing 2,700 workers. Now, they don't know if he's missing because of bad things happening, or if he's just trying to stay undercover because he fired so many people, or maybe somebody that got fired didn't like the fact that they got fired and something else happened to him. That's another story. United Furniture owner laid off 2,700 workers through text messages and emails. And this is right during the holiday season. So obviously he doesn't want to have a very high profile right now. No one has heard from the owner. He's not returning anyone's phone calls. Sorry, it's my dryer going off. There we go. No one has heard from the owner. He's not returning anyone's phone calls. It's such a terrible situation. One source told that had knowledge of the situation. The company is considering filing bankruptcy. So again, right into the holiday season, we have a furniture store considering filing bankruptcy, firing 2,700 workers. That is a symptom of the housing slowdown, ladies and gentlemen. Furniture stores, construction stores, Home Depot and Lowe's, I think they're going to be next. I think we're going to start seeing some big layoffs out of them in 2023. I think both of those companies are, they have to see layoffs because home improvement declines with the housing market. And that's such a big thing. We're going to see more mortgage layoffs. We're going to see real estate realtors turn in their licenses or just let their licenses go inactive. We're going to see appraisers, loan officers, underwriters, lose their jobs and probably have to find a new career. Now, still on the topic of the housing market, let's jump into Wolf Street. Wolf Street is out today, Wolf Richter, with some numbers and some nice charts. The biggest month-to-month price drops over this past month occurred in Seattle, down another 3%. San Francisco down another 3%. Las Vegas down 2.4%. Dallas down 2.1%. San Diego down 2.1%. Denver down 2%. So it's similar to 2008. Of course, there's many differences, but this type of correction that we're seeing is concentrated in a lot of the bigger cities that saw the biggest run-ups in prices. There's other cities, though, smaller cities, that haven't seen any price corrections hardly at all. Nationally, prices are coming down when you look at the whole bucket, when you look at the entire nation median price. But these bubble cities are seeing the biggest declines. And some of these charts are amazing to look at. The price went parabolic in 2020, 2021, and now it's going parabolic back down. So it's just like this, the run up, then the run down on the other side. The chart looks like this. I'll actually put it up here. I'm just going to put up the San Francisco one because that's the one that has the most obvious peak and then drop. And it looks like it peaked out right at the end of last year, right at the beginning of this year, when mortgage rates began to rise. Seattle, Washington, similar chart, looks just like this on the peak, and prices are coming down very hard in these areas. San Diego, same thing. Los Angeles, same thing. Denver now is down from the peak in May, 5.7%, but still up 9% year over year. Wow. So when something is still up versus last year, would you actually call that a crash? I still wouldn't call this a crash, right? So my prediction is still correct. I have been predicting and predict that there will not be a housing market crash. It's going to be a slow motion decline. We have the powers that be out there backing now $1 million mortgages, over $1 million mortgages. That's Fannie Mae and Freddie Mac. So that's going to encourage more lending, and it's going to get more people into a home that normally would not have been able to get into a home because you have that looser underwriting. And they're doing that to try to soften the blow on these rising interest rates and rising mortgage rates. Very interesting. So obviously somebody out there is concerned about home prices coming down. They know that it has the central bank, obviously, they know that it has a broad impact on the economy when home prices come down. And back to that furniture store story at the beginning, all those layoffs and people getting fired through text messages is just one of many examples that we're going to see. It's going to go into the hundreds and thousands of tens of thousands of small businesses. It's going to be very, very bad. Consumers are getting maxed out here. And actually, some mainstream news is actually beginning to tell the truth. Now, it's not their headline story, but sometimes in interviews, the real deal is being leaked out. Here's Power Lunch out of CNBC. Quote, the consumer is running out of wallet. The consumer is running out of wallet. That was CNBC Power Lunch. Ron Insana, the North American Senior Advisor for Schroders, and Michael Farr, Hightower Advisors Chief Market Strategist. They had an interview with both of them, and that was a phrase and a quote that I wanted to, that I thought stood out there. The consumer is running out of wallet, and yes, that's what we've been talking about here for over a year now, since savings increased when the lockdowns and the pandemic and all the freebies were handed out, and the pauses on the rents and the pauses on the foreclosures and the utility bills and all different types of loans, student loans, and even more. People saved up money during that time. Now we've plunged back down as U.S. consumers. Our savings, our checking accounts, and the amounts in those accounts have plunged back down to pre-pandemic levels and way down below that, all the way back to financial crisis levels. But I hardly ever see it talked about on these business news networks like Fox Business, like CNBC. Pretty amazing. Even millionaires are worried about the cost of living and being able to retire. CNBC article here, 35% of millionaires say it's going to take a miracle to be ready for retirement. A miracle. That's what they're saying here. Folks, when millionaires, 35%, over 1/3 of millionaires say it's going to take a miracle to be ready for retirement, we have big problems. And these are the millionaires. What about the non-millionaires? Who's going to be ready for retirement? Are we going to see greeters at Walmart in their 90s, 95, 100? I feel bad, especially the way people are stealing stuff out of these stores. Those people are going to get run over, and they're going to get hurt very easily. Fewer Americans feel confident about their retirement security amid persistent high inflation and market volatility. And it's another thing. People see their 401ks dropping. Some people went out there and they put their money into a stable fund, a money market. And that's a very small percentage of people. Most people just let it ride. They'll won't touch it. They'll put it in there. They won't touch it. They'll contribute each paycheck, and they'll just ride the ups and downs. They have no idea that there's going to be ups and downs or when they're going to happen. And sometimes it can take a long time for people to get back to where they were at, after the big drop. Even millionaires say their savings won't cut it, according to a recent report. A cool million is not what it used to be. That's one of the sub-headlines here. There are more millionaires in the U.S. and globally than ever before. Yes, when you look at the value of assets, when you look at the home price still, even though they've come down some, we're still at historic high home prices, not all-time highs. The all-time high was actually in most markets back in May and June. But historically, wealth is at its highest because all these bubbles, the stock market bubble, even though the stock market's coming down as well, it's still historically very high, higher than what it was in 2008, higher than what it was before the dot-com bust in 99, 2000. And this is the wealth effect. But the wealth effect, folks, is drying up. And we're just at the beginning, and already 1 in 3 millionaires say it's going to be a miracle to be ready for retirement. So what's it going to be like next year and the year after? This is going to be pretty interesting. Permabear Nuriel Rubini's out there, and I don't talk about him very much because he's been kind of a broken record for many, many years. But he again is sounding the alarm and a warning. The mother of all economic crises loom. The mother of all economic crises loom. I think we're going to see a lot of people get wiped out in 2023. I hope it's not anyone here on this channel. I continue to use caution in my spending, trying to stay out of debt. These interest rates will nail you if you have a credit card balance that you can't pay off. And I'm waiting for prices to come down in areas that I would like to make some pretty major purchases in. I'd like to move up to a bigger home at some point. Definitely not yet here in San Diego. Not the time to buy, in my opinion. I'd like to get a newer vehicle. Definitely not the time to buy a newer vehicle, in my opinion. I'm going to be waiting and seeing how these price corrections play out. And I think we've got some downward pressure, a lot more downward pressure to go on prices of homes and automobiles. Now, the things that you have to have, we will continue to see the cost of food go up. We will continue to see the cost of energy go up, even though it came down here recently. I think the long-term trend is definitely higher for both of those. Remember, the Fed, they can manipulate rates. They don't grow food. They don't build houses. They don't drill for oil. They don't create gasoline for heating your home. They don't create natural gas. And that's the bottom line, folks. So they can't print all of these items that people need to survive. So continue to prepare, continue to brace. Please let me know what you think about the furniture store laying off $2,700 through text messages right here in the midst of the holiday season. Pretty bad. Is he missing because something bad happened, or is he just in hiding because of the fallout from all these over 2,000, almost 3,000 people? Please let me know what you think down in comments. What do you think about the 1 in 3 millionaires? Say it's going to take a miracle to be ready for retirement. Crazy times ahead, folks. Keep on stacking, and thanks for being here. Be well. Bye for now. Peace. We'll talk to you very soon.